Get Rich Slow with John Wolf. Hey, today I'm going to show you the parts of the mortgage lending and pricing process that the big lenders absolutely don't want you to understand. In fact, they pretty much count on you not understanding. Now, for all of this to really make sense and sink in, you need to watch my video on basics of a conventional loan, price shopping, and the video on how to compare written quotes side by side, as well as my video about private mortgage insurance. Anyways, I'm a loan officer in Oregon and Washington. I would love to help you get the absolute best deal on your home loan. Anyways, let's take a look at some of the math. Let's go right to the meat of it. So let's talk about points and interest rate. And this part does not at all include the fees or the mortgage insurance, which are big players to this whole discussion. But this is the part that they don't want to see you. They don't want to show you. Now, this is an old rate sheet. This is not a quote for you. Don't sue me. But I just want to show you what the math looks like. So over on the left-hand column, you have interest rate. And you can just about get any interest rate you want. The next column is the number of points that it takes to either, if you go with the red number, that's how many points that you're charged as a client to get that loan, or in the green number, that's actually how much I have to pay you to take it. Only a couple times have I locked a client at $0 in either direction. It just doesn't really happen often. And then the third column here is the expression of how many dollars in thousands of dollars you have to pay or be paid to accept that interest rate. And then over here on the far right is the associated monthly payment difference. And I don't even remember what the loan amount is, but you can pretty easily notice from one little 16th or 20th of an interest rate, there's not a huge impact on payment. Again, this payment doesn't include taxes and insurance or mortgage insurance, which are all really important. But, I pretty much always lock people at one of the two numbers closest to zero. And I kind of ask them which way they want to go or if they want me to pick for them. And it's really important you also understand this number changes many, 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 many times a day on a normal day. And if we're going through wild financial times, they can change by a lot. It's not the interest rate that changes, though. It's the amount of money that has to change hands to in one direction or the other to get the rate. Now, what part of this do the big lenders not want you to know, especially the big lenders who run tons of Super Bowl ads and commercials all over the internet? Well, they'll show you an interest rate on their website. And a lot of times, if you read the fine print, in addition to all of the normal fees, sometimes they have high fees, sometimes they don't, the interest rate they advertise is usually with you paying 2 points, not like 0.187 points, 2. So if you're paying 2 points, that means if the loan is $400,000, to get that low interest rate that they're advertising to you, they're going to want you to pay their, $1,000 to $4,000 in standard fees. And then they want you to pay them $8,000 as an upfront fee. That money is gone forever. And so they're showing you that nice, low, juicy interest rate because they know that the American public has been conditioned for home loans to only pay attention to the interest rate. Let me just show you a couple other interest rate scenarios, just so you understand how kind of weird this game is. So right here is a rate sheet, and this actually happened to be an FHA rate sheet that I took at the same time. And you notice there's these weird bubbles where, here I have to pay you at 4.5, and then there's a whole stretch where you would have to pay me money, and that 4.125, I have to pay you money again. And then the only thing that's really interesting, if you go all the way down to 3.7, that one you don't have to pay very much money for. And if you just do the math, the difference between the payment here and down here and the dollar cost difference, so it's $1,775 versus $1,680, and it's only about $1,000 flop in between, that's going to make sense to do. Buying these lower interest rates for thousands of dollars, if you do the math, that's really not going to be worth doing. I do also want to show you how much credit score matters to these sheets, because it's actually a lot less than most people think. Um, so this is the exact same scenario, but with somebody who has 100 points better credit. So with 100 points better credit, that great little interest rate down there went from you having to pay, I think it was like what, $600, to now you being paid $300. So 100 points in the credit score only saves $1,000. I mean, I'd love to save the $1,000, but there's so many people out there who think they can't get a home loan right now because their credit's a little too low, and they think that they're going to lose tens of thousands of dollars from a lower credit score. And as you can see, a decent amount of time, that's just not the case. And it's especially not the case if you're doing like the fantastic Washington Bond Zero Down program, which is basically at 3% interest right now. Or if you're doing the Oregon Veterans Bond program, which I believe is at 2.625% interest. But anyways, there's all these great programs that are different, but this is the way that the pricing looks for way more than 80% of all the home loans that are made. And again, I just want to take a second to reiterate the places you need to look and where your money is going when you're looking at a home loan quote. So again, there is the interest rate, there's the amount of points you have to pay, there's the fees that they're charging, and again, don't count the taxes and insurance in the fees that they're charging, because everybody's going to be the same. And also in the state of Oregon, at least, you don't need to count the title charges either, because everybody's going to be exactly the same on that number, even if they quote slightly different numbers. And then again, you have the mortgage insurance, and people are shocked often by my quotes because of the difference in mortgage insurance. So if you're putting anywhere between 3 and 15% down, the mortgage insurance rates between lenders often vary by a lot more than their interest rates. So I have frequently been in scenarios where someone has asked me to bid against another client, and I might be the same or $14 a month higher on the interest rate, but I'm the same or the lower fees, and because of the mortgage insurance rate difference between me and the other company, I'm like $100 a month less. Well, you should probably go with the one that's $90 a month less and has lower fees and points, if that's the case. And if I'm not the best price, then that's fine too, but you need to make sure you understand all the different categories. Anyways, I hope this was helpful. Like, share, and subscribe. Let me know if there's anything specific you want to see. Have an awesome day. Bye.